Welcome to the Slash Tax Podcast, where we explore strategies to reduce taxes legally and ethically while building long term wealth. And today's episode is really special for me. I'm joined by someone that I've worked alongside for almost 15 years and someone that I truly consider like a brother, one of the very best in specialty tax, Mike Donofrio.
Thanks,
So,
Heidi.
Mike, thank you so much for being here. Mike has over 18 years plus of experience in specialty tax specifically and tax consulting. And during his career, he's worked with some of the largest real estate developers and investors across the entire country. At Engineered Tax Services, he's also serving as the chief product officer. So he's helping lead not only our ETS operations team and client service, but he's really developing and expanding additional service lines to bring more value to clients and CPA firms nationwide. Today, we're going to dive into cost segregation because it's like our bread and butter and what we are the absolute experts in, what it is, how it applies to clients, and where Mike sees the biggest impact. And then we'll explore how ETS is now expanding into other services, other ways to better support our clients and to be able to support the real estate industry and business owners. And so with that, Mike, thank you so much for joining me. This is going to be fun.
Awesome. Great to be here with you, Heidi. I feel like we're together every day and have been for years, but this is a special discussion.
Yeah, absolutely. I feel the same. So I was like, oh my gosh, I've got up Mike's calendar. Like we're doing this, just the two of us. We can like dig into what we do every day, but share your expertise because again, you're working with some of the most impressive groups in the country on some really cool projects. Will you talk a little bit about what the last how long are you with ETS now? 18 years?
Yeah, it's going on 18 years. Maybe a couple years, informally before that. When I had
Yeah.
met, Julio and some of the team members. But yeah, going on 18 years. I look at my little boy, who's now 18, and I remember when he was born, and man, it's been an amazing journey.
Isn't it crazy? But time flies. So talk a little bit about your background and what brought you here. Why specialty tax?
Okay. Well, I grew up in Cleveland, Ohio, grade school, high school, college in Cleveland. And then, right after, immediately after college, I moved to South Florida and was working with some big industrial companies and then transitioned into really private equity groups, where we were doing strategic intermediary, strategic advisory work for buy side and sell side clients. And, many times in those deals, there was substantial, real estate assets involved. It might have been a manufacturing company or a frozen food company that I could remember, or, software and technology. And, and then at the tail end of that, there was some situations that also included some fairly large energy deals where we were working on, pipeline related assets and then renewable energy projects with wind and solar and geothermal and microturbines and all these cool things. But, that was also the beginning of some of the energy tax credits back in the day. So,
Hmm.
I was looking for a firm that had some specialty around that. With the investment tax credits, for the biofuels or for the renewable energy projects or some of the things that we were working on with the clients. And, ETS was such an interesting company. When I met Julio, we were a very small team at the time, in downtown West Palm Beach. And, you know, I saw an opportunity once I saw what engineered tax was doing at the time, was really to focus on being that specialist for that type of need, for the transactional need of someone, buying a property or investing in a company or building or developing something, was to really have that specialist that not only knew the particulars around the energy tax credits at the time, but then everything else that I learned about that was, very applicable to so many different transactions for clients of all shapes and sizes. It's not just the big, private equity groups or investment groups. It's the smaller family, the investor, that's buying that gas station or the car wash or the oil change or the multifamily property or, whatever it is that, we could deploy over and over again and also be that specialist for the CPA firm and with the CPA firm and with the investor group to help them understand, what was going on, with cost segregation and bonus depreciation or those energy credits, incentives, deductions, whatever. And then other things that yeah. And then I joined the team, full time, just because I saw that great opportunity to expand that network. So many CPAs kind of knew about some of these things, back in the day.
Hmm.
They kind of knew about cost seg. They kind of thought maybe it was only for the larger clients, at the time. Remember hearing like, well, if it's not a $5 or $10 million property, it kind of doesn't make sense. But we were really able to distill that deliverable down to exactly what the client needed for different size and type properties. And then also, layer in comprehensively, those energy credits. We're doing the research and development tax credits. So I really love the opportunity to be that comprehensive, specialist, that understood the tax code, the federal, the state, the local incentives, credits, rebates, whatever, even down to the local utility level and the municipality of what's the special sauce or the missing, ingredients that we could deploy into that deal for the clients, to mitigate tax, preserve,
Hmm.
preserve wealth, and, help them generate more income.
That's like so perfectly articulated because it is like truly the epitome of what ETS has become and what we've
I've said it a few
become.
times in my career, but
Yeah, yeah,
but
it's been
I
said a
honestly
few
don't
times.
even honestly don't even think about it. It's not hard to conceptualize what we do because we do it so often for so many different clients.
Yeah.
Um, and it's still a missing need, out there, for the CPAs and for so many, of our partners that we work with.
Yep. Well, and you've worked with some huge companies. You've worked with some big investors, big family offices, giant projects. But one thing that's interesting is I think there's a lot to learn from those experiences and how you can bring those to a broader client base and help that be more applicable. Can you provide an example, like an experience you've had where you've seen some of this deployed on these huge projects, that are applied
Yeah.
at the top levels? How are you helping bring that down to that broader client base and helping people benefit from these incentives?
Good question, because at the end of the day, the what we do in the deliverable for us is the same. The numbers might be drastically different, and the client's level of expertise and familiarity with certain types of the, specialty tax and engineering things that we do, but at a very high level, and maybe more, visible type of project level. I mean, we've done some things, and I'm trying to be careful with confidentiality because we're always careful with that. But we've done things
Yeah.
for a lot of NFL stadiums, across the
Mhm.
country, for my hometown of the, Cleveland Browns and the Denver Broncos and the Miami Dolphins. And I personally led some of those engagements, plus the Superdome in New Orleans. I did an energy study on that building. I did the Bridgestone Arena in Nashville. I'm sure you've been there to see some concerts and stuff.
Yep.
And the Raiders' new training facility a couple years ago when they built that. You know, it, but that's just visible examples that I've used with clients. Um, because it's the family, it's the investor groups, it's the sometimes the cities and the municipalities that are involved in those projects. They all want the same thing. They're trying to figure out, hey, what's available at the federal, state, and local level? What can we deploy, into those projects? Not only to help with the tax benefits or savings, but is there a renewable energy aspect to it that we can help with, sustainability or energy efficiency or whatever. We were working on all different types of things on those projects. And those are just sports stadium and, cool recreation type projects, but all the multifamily properties that we've done over the years, and these aren't little ones, they're 2, 3, 4, 500 unit, mixed use multifamily buildings in Miami, in Chicago, in LA, and, Las Vegas and other places where we go down the street and we're like, wow, that we worked on that project, for that client.
Yep.
So those big examples, those big, visibility type projects also gives our, other level of clients, the confidence that we know what we're doing. I mean, obviously we can do a single family, 3-bedroom, 2-bath house, and that, two, three, four, $500,000 investment for that client on that type of property is just as important as the two, three, $400 million project, that I was just referencing. Because that tax
Right.
benefit for that
Yeah.
family or that small investor group or that client that owns the retail business, in the small town, that it's the same thing. We give it the same passion, we give it the same level of expertise. And
Yep.
that's what's so cool about our client base.
Well, it's cool because sometimes those small projects and normal, what I call normal people, small investors, people like yourself and myself and our friends, sometimes it's more impactful when you know that this is a direct savings for a family, for just regular people, and it's a compelling amount of money. And yes, we can do $1 billion project or hundreds of millions of dollars in benefits and tax savings, and it doesn't necessarily have such a profound impact as it does on just some of these regular investments. So let's start with the basics. I would love for you to provide, since you've been doing this forever, I think you can articulate it as good as anybody out there. Define how can you simplify and explain what is cost segregation?
Okay, the way that I define cost segregation, literally just off the top of my head holding the baseball, is it's segregating a building down into its components, for tax and depreciation purposes. I explain it to clients every day that similar to an appraisal, because most real estate folks are familiar with appraisals. You hire someone and they visit the property and they do an analysis. So we're doing a study that's very similar to me, like an appraisal, but we're not doing it for valuation purposes. We're doing it for asset identification purposes. I want to identify all the different pieces, parts of that building, inside and outside the building. The flooring, the cabinets, the countertops, the lighting, the electrical, the mechanical, the roof, the walls, the windows, the outside, the landscaping, the fences. Does it have a pool or not have a pool? Um, but the reason we're identifying all those things is to put them into all of its proper asset classifications for tax. And then the CPAs will be able to see in our final cost segregation, or component, we're identifying all the different assets of that building. What's the 5-year property? What's the 7-year property? What's the 15-year property? What's 27 and a half year if it's residential, or 39 years if it's commercial? So that report identifies all the assets. It identifies which parts of that qualifies for bonus depreciation. And here we are back to 100% bonus depreciation again, right?
Yeah.
I call it the big, beautiful bonus depreciation tax bill. Um, so that's what a cost segregation study is. I mean, I also explain it, like your personal tax return, right? You can take the lump sum deduction, or you can take the itemized deduction on your tax return. So rather than taking the lump sum deduction, lumping together the building and the land and the improvements on that depreciation schedule, we're taking an itemized approach. Yes, we're taking land and building, but underneath building, it's going to have all those different components. We're going to be able to see what qualifies for bonus depreciation back to 100%, which is great. Again, it doesn't mean you can take 100% write off on the whole building. It means you can take 100% write off on the assets that qualify, anything underneath 20 years, the 5, the 7, the 15-year assets. And that's what we do. That's how we do it. Like an appraisal, we professionally visit the property, we take pictures and notes, and our engineers do the work to identify all the assets, assemble it into, an engineering-based report. And within a couple of weeks, we're done. The clients have what they need, the CPA has what they need, the IRS has what they need to, be able to substantiate, the tax write-offs. That's what we do.
Hmm. Where do you see the biggest impact with cost segregation in terms of property type?
Oh, man, that's a question I get every day, right?
I know.
Especially this time of year, as we're getting in towards, towards the fourth quarter, right? Not in football, but you got to do it before the end of the year. So clients are calling me, hey, what's the best property types to look at for bonus depreciation? And the first thing I tell them, they're all good, even warehouses and single family, multifamily, retail, those can be great, right? Those are probably going to get, you know, 20-30% of the building basis that qualifies for bonus depreciation.
Mm.
And then there's the next level of properties. There's the there's the self-storage properties, there's the RV parks, there's the, mobile home parks, that might be, 30, 40, 50, 60, 70% of the asset, depending on the property. But then there's I call it the big three, right? Gas stations, car washes, and oil changes. Um, those are definitely the strongest because if the properties qualify, there's a couple different reasons why, because of the amount of the equipment or because of the amount of petroleum sales and revenue. Gas stations and car washes and oil changes um, are definitely the highest. We can write off,
Mhm.
typically almost all of the building, not including the land. So, if you got $1 million purchase taken out, 20% for the land, that's an $800,000 immediate tax write-off on those big three property types. So
Yep.
that's huge, as some would say.
Exactly. I know, and it's so incredible to watch like the industry shift and start to see demand for these types of properties that are great investments. I mean, a lot of times they have a pretty decent cap rate, but then you factor in the tax benefits. I was chatting with an investor yesterday, and he was like, "Wait a second, so essentially the government's buying me a building?" And I'm like, "Well, when you look at the down payment, if you're in the proper tax category or bracket," which leads me to my next question, that as far as the impact of cost segregation, what is the best client profile that you typically see for utilizing this?
So the best client profile, um, for sure, would be someone that's already within, the real estate business. They're already active real estate professional for tax. Either they're involved in short or long-term rentals or multifamily, or whatever their property type is. But if they're already an active real estate professional for tax, meaning they meet the material participation and the activity time requirements, those are the absolute best clients, I think, because they're already doing it. They can already utilize, you know, all of the depreciation. They might be selling properties where they need, additional bonus depreciation to offset cap gains or, or other reasons. So those are the best, for sure the best property types. I mean, the property clients, if they're already active in the real estate business.
Mhm. Yeah. What other well, talk a little bit more about material participation. I mean, this again is something that is confusing. I also try not to dive into it too granularly because it gets complex, but what are your comments or directions, I guess, for clients who are trying to understand if they can benefit from investing in a project or a property type like this, benefiting from bonus depreciation, using the tax benefits? What are some of and let's assume they're not already in real estate.
Mhm.
What are some of the points that you'll make or I guess advice that you might give someone?
So my advice is always definitely understand the tax law, right? The IRS publishes all this information. You don't. I mean, you can use our website. We've outlined some things on in terms of what is material participation, what's real estate, professional status, rep status. Understand that because there's some very specific requirements. You and I get phone calls every day from folks that are like, I'm going to take my real estate license test, and that means I'm a real estate professional so that I can use all the tax benefits against my, W-2 wages or whatever the situation is. And, I always caution them. I'm like, no, just because you're, taking your real estate test or you're a real estate broker doesn't necessarily mean you're actively participating in the operation and management of that particular asset. In, in
Yeah.
fact, I caution them that them having their real estate license is a great tool for the IRS to audit them and say, how many other properties are you working on that aren't your properties? And they're like, oh, I never thought about it that way. So definitely understand the tax law. We can provide you with, very specific, guidelines, from the IRS. And it all comes down to being active, you know, active operation, active management of your specific assets, that you're claiming that status and you're taking that benefit on. I mean, that's how it works, and I caution folks not to try to get around it, because, the IRS is watching,
Mhm.
these types of activities, especially when you're talking about, those types of assets where you might be buying, a gas station or a car wash or oil change where it has, millions of dollars of immediate bonus depreciation. And, I talked to a husband and a wife yesterday, and they were telling me about some properties that they were looking to buy. And, the husband has a W-2 income and the wife, has a W-2 income, but was considering, well, I can do this on the side and I think we can meet the, material participation. And I'm like, I said, I don't see it. I don't know how you're going to do it. I suggest you talk with your CPA. And she says, well, what if we keep track of our hours? And then we started talking about the short-term rental loophole, how it drops down, from 750 to 100 hours. And I said, look, understand the rules. And if you're going to do it right, and then number three, document it,
Yeah,
documentation, have a
yeah.
log, have an activity log, and it's not investment related activities. That's the first thing the IRS will say. It's not investment related activities, meaning researching properties, looking for properties, looking for investment opportunities. It's active, ownership, management and maintenance of those properties.
Yep. Yep. Absolutely. Yeah, I love that advice. I agree. I mean, it is complex. It's part of being a real estate investor is understanding some of those rules and understanding the parameters and those boundaries of where to operate, and also again how to document and track that. So I couldn't agree with you more. Shifting a little bit to kind of broadening now and looking at your role as chief product officer, you're leading that development for ETS. So beyond COSEG, what are some new services or expansions that have been rolling out to help better serve clients that's really been part of what we're doing here at ETS?
The thing that I think about every day is how else can we help clients? We've done a great job, going on 20, 25 years of, doing those cost seg studies, doing the energy studies, doing the research and development tax credit studies. But, then sometimes the clients will come back to us and they'll say, you know, how else can you help me? Maybe I didn't buy a building this year, or I didn't invest in, a property this year, or I don't meet the, real estate professional status for tax purposes. So, what other things should I be thinking about? And what other ways can we be helping the client in that transaction, as comprehensively as possible? Because if they're buying and building and renovating real estate, they're probably going to have an insurance need, right? So, one of the first new businesses and product lines, thank you to your help as well. We spun out and started, engineered insurance services. So we have engineered tax services, engineered insurance. Tax was the first and foremost problem that we look to take care of for clients and mitigate that where possible. But everybody needs insurance on their properties, on their companies, plus the E&O and D&O and the cyber liability and the, every other aspect of insurance. So
Hmm.
utilizing already the details that we have in our cost segregation studies, again, we're collecting a lot of great information on those buildings. We know where they are. We know what they're used for. We know what the cost is of them. We know what kind of roof they have. We know how many tenants they have. That's the type of detail that the insurance carriers want to have on those properties as well. So we merged in an existing, very experienced insurance team based out of Cleveland, Ohio. Go figure, where I'm from. So we had some good relationships, and we hit the ground running very quickly last year to also be able to provide those insurance, agency services for all property types, that we work on, from the single family investment properties to the, office properties, multifamily, industrial, data centers, you name it. Doesn't matter what kind of property or company type, we can handle that. So that was one of the new products and companies and strategies that I
Hmm.
worked on, and then kind of the second thing was in the transaction is I think about the sale. We do cost seg studies, on the purchase or the new construction or the renovation. But what happens when they go to sell that property?
Mhm.
we need to think about tax mitigation, right? So what's the first thing that they always ask about? 1031 exchanges.
Yep.
So, we work to be able to also be the, provider as the, exchange intermediary, in a market disrupting model where we actually don't charge fees, for that type of service and get really transparent on the money that could be made on the carry, on the money that's sitting there for 30, 60, 90, 180 days. So
Mhm.
that was the second service line, new product, that I worked on. And then enhancing some other things that we have been doing that a lot of clients just aren't aware of. Others tax savvy type investments with jets and aviation. Sometimes the owner of a company or a firm or a high net worth family or a crypto investor is like, "Hey, I heard about jets. You can invest in a jet and you get a tax deduction." And but then lo and behold, 100% bonus depreciation came back, in
Mhm.
2025 on July 4th. So that brought all of those other strategies right back to the forefront. So, we have a engineered aviation program where we can help clients through that complete, you know, sourcing, identifying the asset, structuring it, making sure they understand, the charter or the income opportunities, also the expense side of aviation because it can get quite expensive, but if
Mhm.
done right, c could be neat to have one, could be neat to use one, and definitely has a great tax benefit.
Yep.
But then jet is just a piece of equipment, right? Equipment gets 100% bonus depreciation. So we also have an equipment program where clients can invest in other types of equipment that are definitely not as expensive as a jet. For as little as $100,000, you can be buying other types of equipment that also qualifies for 100% bonus that also that is generating nice revenue. So not only is it a nice tax deferral, it's an income generator as well.
Mhm.
To your point,
Talk a little bit more about the equipment option
Mhm.
because this is a little bit of a business model that's really interesting, and we've certainly had some clients who are pretty fascinated by this opportunity. So it's a bit of an investment strategy in terms of equipment. Talk a little bit more about what that looks like.
Sure. So a lot of folks don't realize that, a lot of the equipment that might be sitting behind, a lot of the brand name locations that they would know, the Sunbelt Rentals, the United Rentals, the Herc Rentals, others. Um, they might not even own all that equipment. It's sort of like if I go to my Ford dealership or you probably go to your Dodge dealership.
That's right.
It's almost like financing a floor plan of vehicles that are sitting there. So another business, tax savvy investment opportunity is investing in some of that equipment that goes onto the revenue share program of some of these big billion-dollar equipment companies, and debt is available on these properties. So easy math is $150,000 will get you about $1 million worth of equipment because you can get 90% debt, which is, rare. Good luck going to buy a gas station or car wash or other business and get 90% debt on your real estate asset. And
Yeah.
you're getting 100% bonus depreciation on the full $1 million of equipment. And when I say equipment, I'm talking about smaller yellow and white iron steel type of equipment, right? So scissor lifts, aerial telehandlers, track hose, bobcats, that type of construction equipment. So every one of our real estate clients, every one of our construction clients, like they immediately know what I'm talking about. They're like, "Oh,
Mhm.
we have that stuff at every job that we're working on."
Yep.
They're like, "I didn't know that I can invest in that kind of thing, and I didn't know that
Mhm.
it gets 100% bonus depreciation." Or they'll actually say, "Oh, I did know that, but I forgot about it," because,
Yeah.
they've heard about, the SUV loophole, right? Like, "Yeah,
Yeah.
I heard about going to buy that G-Wagon, from that guy on Instagram," and I'm like, "Well, it's the same thing, but I don't wanna buy a G-Wagon. I wanna buy an equipment that's gonna generate me revenue." So,
Right, yeah, because that's the biggest difference. It's like, okay, fine, I can go buy a work truck or I can go buy a piece of equipment for my job site, but that's not going to make you any money per se. That's usually a depreciating asset that's going down in value as we use it up. But the difference with what you're talking about is that essentially you're investing in equipment that goes into a rental pool, which is then the goal is to actually generate income and revenue from those assets. So that is what's really fascinating about this concept is it's a group really that's able to structure these in a way where this is their expertise. They have the ability to put these equipment all of the equipment into these rental pools with big name brands and actually generate revenue off of these. So it is a legitimate business structure, right?
Yeah, it absolutely. I mean, you're essentially creating your own equipment finance company is what you're doing because you're not renting the equipment, someone else is, but you're creating an equipment finance company, and it's a lot of other types of equipment, that I'm helping them bring onto their platform that people don't think about, but they know about. So we talked about the construction type of equipment, but what about all the stuff in data centers, right? All the racking, all the servers, all the anything that's tied to anything that the first is a solidly per the tax law depreciable asset and is tied to a revenue generating income stream, over a longer period of time are things that we look at for this program. So definitely
Yeah.
construction related equipment,
Mm.
data center racking, servers, um, dump trucks and roll off dumpsters. I mean, every single hotel or you see the big blue dumpster that's there.
Yep.
That's a piece of equipment, and I actually like dumpsters because they last for a very long time and they don't they don't deteriorate.
Yeah, right, right. Amazing. So, what other opportunities or strategies are you seeing out there that clients are asking about and you're seeing have some benefits?
Yeah, and you and I are going to do a deep dive on some of these other ones here shortly. But just to kind of give some high level, we work with clean energy financing,
Mhm.
CPACE, is another thing, depending on the state, depending on the project, there's a way to get specialty financing, for your energy efficiency assets in a property, so lighting, HVAC, roofs, windows, a lot of pieces, parts of new construction and of major renovation projects, we can help finance, through a CPACE program. So that's one thing. We're also looking at opportunity zone projects. We're kind of right in the straddle season of, the end of the original opportunity zone program that started
Mhm.
in 2017 and is going through to 2026. The current administration has signaled that there's going to be a refresh of the opportunity zone project, restarting in 26 with re-identified opportunity zone, geographic locations. So that would be pretty exciting. So we're thinking about opportunity zones. We're thinking about solar and renewable energy.
Mhm.
There's still some tax credits out there, for solar and other renewable energy projects. Um, Man, we're doing some things around valuation and structuring. Some of the things that you and I work on in terms of proactive tax planning with clients.
Yeah.
Before you get to the end of the year, before you sell the company, before you buy this company, before you buy the real estate, before you sell the real estate, whatever the situation is,
Mhm.
get with us. Get with us proactively. I'm not saying that your CPAs are not good, but we are great at being proactive, and
Yeah.
and helping them, to take some of the workload off the plate, with advanced tax planning of, before, before the thing happens, right? Because
Right.
once you call me in January of 2026 and you say, "Wow, I had a really good year in 25 and I owe all this tax," the first thing I'm going to say is, "I wish you would have called me in September or October of 2025 because there's a lot more that we could have done,
Yep.
with equipment or a jet or a 1031 exchange or buying another, real estate asset, which could be, but that's, there's probably 5, 10, 15 other things, when I take my engineered tax hat off and I put my engineered advisory hat on, where we're really working, proactively, entrepreneurially, and transparently with that client to identify other things that they could invest in, that they could structure differently, that they could plan, before the end of the year or before the transaction happens. Those are some of the other things that we're doing.
Yeah. I mean, it's amazing because it really is it's come very full circle for us in terms of the tools, the technology, the implementation that we've pulled in, looking at first off, starting with tax credits, incentives, then moving over into grants and other funding opportunities, and then shifting into alternative investments. Really just looking at strategy, strategically, what are the opportunities, and how does it all come together? Typically, other than the insurance side, typically it all comes together based on really looking at optimizing tax, which is in most people's situation the largest expense. And if there's an opportunity to choose how to invest those dollars, we can choose to allow the IRS to invest those into infrastructure or however they use our money, or we
Right.
can choose to invest those into our own investments, which the IRS actually allows you that choice. And I think that's what most people don't realize, and is so profound. So we haven't talked about R&D credits, which I think we'd be remiss to not just mention that, since that's also been a significant change in the one big beautiful bonus bill. I like that you added an extra B. So talk a little bit about R&D as well, which is a credit for business owners and has been a pretty big change we just experienced.
Yeah, maybe we should call it the one big beautiful bonus depreciation and immediate expensing tax bill, because then because then we're talking about research and development tax credits. It's not just
Yeah.
bonus depreciation; it's
Hmm.
immediate expensing. And what they were referring to there in the tax code was really research and development tax credits.
Yeah.
Because there was a there was that period of time where certain research expenses were supposed to be amortized over a 5-year period rather than immediately expensing those, along with getting the tax credit. That kind of ended and was kind of forgotten about in the tax code, maybe by mistake. I'm not sure, but the good thing is that the Trump administration, within the tax bill in July, they changed the tax code back to how it was before. So not only for research and development tax credits do you get the tax credit, you can also immediately expense those research expenses. So it's almost a
Hmm.
bit of a double dip, which is great. You can go back to expensing the qualified, wages and third party, third party costs and materials and supplies, whatever your QRE is, right? Qualified research expenses along, that with the tied to the, QRA, the qualified research activities. So I love research and development tax credits. That's honestly one of my favorite things that we do. And the reason
Hmm.
is we get to learn so much about our clients, and what
Yeah.
they're doing, what are they working on? I mean, obviously we keep that stuff very confidential,
Yeah.
but you know, it's all tied to, I mean, research and development tax credits are specifically for US job growth, US innovation, US security, um, helping companies to thrive and incentivizing them to spend money on the innovation of that product or the
Yeah.
process or the
Yep.
technology or whatever the thing is.
Yep.
But that's why it's my favorite.
Yep, I'm with you. I mean, we do so much with real estate. I love real estate. My whole career's been in real estate. I think a lot of yours has been as well. But to your point, when we're dealing with clients who can claim the R&D credit, it gets really fun for us because we're dealing with inventors. We're dealing with people who are building really cool things and patenting new products, and it's the creative inventors of our country. So it is always amazing to be able to talk with these companies and hear about what they're doing and what they're building and investing in, and
Yeah.
really, really cool. So I'm
And,
with you.
and even
I
and
love
even some of
those.
the boring companies that you're like, oh, I didn't realize that qualified for research and development. I mean, there's a company, I won't say the name, that's in Sarasota, Florida, that makes, certain types of cups that we use all the time, certain types of tumblers that we
Yeah,
use all the time. And I was like, I didn't even think about it at the time, but their injection molding process and their quality control and the review that they do and the next iteration of their products and all those things. I'm like, wow, I didn't think about of course, it's the biotech and the technology and the software and the cool defense product and the heads-up display and augmented reality stuff. Like, yeah, of course, it's that stuff. But don't forget about the cups or the fence. I did a research and development company study for a fence company. It's not just
Hmm.
the wood fence or the PVC fence. It was their manufacturing process and the efficiency of the process flow and the computer aided design and the thing, so that's the cool thing is as I look around, as I meet with clients, I keep thinking every day, like, there's some research and development activity right there.
Exactly. No, you're exactly right. I mean, it is some of the basic things that we don't think about every day that are just iterations and product improvements every day. So here's a question. I mean, you and I are a little bit biased, obviously, because we have been ingrained with engineered tag services for so long. I think it's what we love. It's what we're passionate about. But we also deal with competition. And, I've said this many times, and I don't know if I've said it on my podcast, but what is it? Imitation is the finest form of flattery. And that is one thing that we see across the board is a lot of imitation and a lot of new firms popping up. And it does create a lot of competition, which is not necessarily a bad thing. But what would you say to consumers in terms of why ETS? What is the differentiator that ultimately defines who this company is and what we're doing?
Well, great question, and I had that exact question yesterday that I distinctly remember, as I was driving from one meeting to another, and I was talking to this very nice lady, and she almost apologized when she asked it, but she said, "You came highly recommended from my CPA firm, and but I really want to know, before I call, two other firms, what makes you different?" Because she didn't understand cost segregation, was something that was mentioned to her by her CPA, and she's like, I just need to know, like, how do I compare the firms? And I told her I really respect that question, especially for someone that didn't understand the industry, because a lot of folks don't understand the industry and the differences in the studies. But what I told her, what makes us different, I said, first of all, we've been doing this going on 25 years. We've been doing it originally specifically for CPA firms, small, medium, and very large CPA firms all across the country. We've worked very hard with a very consistent team, me, you, Julio, Heidi, you know, 10, 15, 20 other people that I could name off that have been here for 15, 17, 18 years working together, building innovative products, doing it right, doing it professionally, but also doing it efficiently, cutting costs, things that used to, you know, studies that used to cost, 10, 15, $20,000 years ago. We can do these studies for, three, four, $5,000 for the small stuff and, five, six, $7,000, $8,000 for the big complicated stuff. So I tell them it's our history, it's our professionalism, it's our longevity as a team, it's the technology, that we deploy into what we do, everything from our client portal to our security protocols to the efficiency of our teammates. And that's how we're able to do, like we started our discussion, everything from the $500 million sports stadium to the couple $100,000 investment property, but give it the same level, of detail, the same level of our whole team, from our business development team to our, accounting team to our tax team delivering the tax deliverables with their CPA. I'm going to get a drink so I don't choke myself. And it's our integrated team. I'm very proud of that. I'm proud of what we do. Uh, I need another drink. I mean, I just really like the consistency of our team, of our deliverable, our professionalism, and we do it right. Sometimes we take the extra, we take the extra step to visit that property. There was some times during COVID, and some other times where, we had the opportunity where maybe we couldn't visit that property in person, for whatever reason. But we quickly went back, and even during that time, to wherever possible, we like to visit the property in person,
Mhm.
by our team. We take the time to take the pictures, the notes, not only to maximize the results for the client, but to reduce their risks, with the IRS, because I always remind that client and the CPA, I say, it's your CPA that's signing on that tax return. It's not
Yeah.
me.
Hmm.
It's the CPA. So I want to make sure that they have the confidence in us. And, all those things together, is what makes us different. Our team, our technology, our professionalism, understanding the tax law. There's a lot of new firms that have popped up, in the last few months, last couple years that, I don't even know if they really exist. I don't even know where some of these companies are located.
Yep.
Actually, I have talked with some of them, and we're actually doing the work now for them behind the scenes, and they're great marketers. But it's just amazing how much our business has expanded, and that's why we will continue to win business.
Yep, absolutely. I love that. So, as a final question, what would be the one piece of advice? And this is kind of twofold, so there may be two answers. But what would be one piece of advice for a CPA or for an investor listening today about maximizing tax incentives?
So, really, same answer for a CPA, same answer for an investor, a company owner, a real estate broker, investment sales professional. Um, First, I mean, it's in my slide deck that I present to them. Like I said, the first thing is understand the basics of the tax code. Take the time to talk and to meet with me or you or some of the other folks on our team to understand the basics of what you can do and how it applies in certain situations. The cost seg, the energy studies, the R&D studies, the specialty tax and advisory and tax savvy investment things that they can do, the structuring. Understand the basics. Connect with us. Let's build a relationship. Let's build the trust together so that when you have a situation that comes up, you know who to reach out to. You know who a teammate, on their team could reach out to. Um, and then you just have to be proactive. You can't get to us a year later, or 2 years later.
Hmm.
Um, so meet us, understand what we do. Let's build a relationship together. Let's build that trust. We'll teach you, the things that we've been doing for years, and I'm very confident we'll be able to do great things together.
Yep, I couldn't agree with you more. Timing is everything, and you've summarized it beautifully in terms of the products that we're bringing to the table that Engineered Tax Services is expanding on, and really the differentiators with ETS. What's the best way for people to reach out and connect with you if they have questions and want to learn more?
Well, you can find me on the ETS website, right? You'll find me on the team section. You'll be able to contact me through there. You can
Yep.
find me on LinkedIn, Mike Donofrio. I'm sure folks will find us on Instagram or other places. But send me an email. Send me a phone call. Send me a text. We have an amazing team. And sometimes if it's not just me on our team, we have an amazing group of folks all over the country. But definitely if you're in Charlotte, North Carolina, where my home is, stop by and say hi. We'll have, beer or sweet tea or something. Or in Palm Beach, Florida, 'cause I go back and forth between Charlotte and Palm Beach all the time. But, my direct number's published out there. It's on LinkedIn. My ETS email is mdonofrio@engineeredtaxservices.com.
Perfect. Well, Mike, thank you so much for joining me today and for sharing all of your expertise. I don't think that there's anybody in the industry as well versed and experienced in this space as you are. Cost segregation has changed the game for thousands of real estate investors, and I know that our listeners will walk away with a clearer understanding of how that applies for them and some of those strategies. For those of you tuning in, if you'd like to learn more about these strategies in tax incentives, check out the links in the show notes, and you can go to the engineeredtaxservices.com website. We've been doing this for over 25 years, and we're here to help you capture every tax saving opportunity that you're entitled to. If you've enjoyed today's episode, please subscribe to the Slash Tax Podcast, leave us a review, and please share it with someone who can benefit from smarter tax planning. This is Heidi Henderson, and I'll see you next time.